exciting infrastructure in the broader XRP. All right, so we're kicking off with a keynote from someone who is building some of the most exciting infrastructure in the broader XRP and EMV ecosystem. Flare Network has been quietly and not so quietly becoming one of the most powerful complements to the XRP ledger. Combining smart contract functionality with the speed and connectivity of the XRP ledger philosophy, Flare is unlocking DeFi, real-world assets and yield strategies in a way that is genuinely moving the needle. Delivering today's keynote is the founder of Flare Network, and please welcome onto the stage, Hugo Fillain. Woo!
Hiya. So I think a lot of people, when they think about Flare, they think about XRP. And my goal with this presentation is to tell you what we're currently doing with XRP, what we'd like to be doing with XRP in the future, and also how what we're doing expands far beyond XRP, most principally to the real-world assets that can potentially be issued on the XRP ledger. So to try and give you an overview of where we're going with Flare, you can think of Flare as one unified stack of protocols. It starts with data. We are, I think, the only layer one in the space that has integrated data into the core validation system. So we have two data protocols, which I'll come on to on the next slide. We have prices, time series data feeds, Web 2 data, and events from other blockchains, principally at the moment XRP Ledger, but also others. We're building seamless interoperability between any chain that is connected to Flare, and with Flare as a kind of hub in the middle. But I think most importantly for our next phase is where we're going with confidential compute. You only get so much from a blockchain. Confidential compute gives you an additional layer that gives you far more compute capabilities. You can just do more, and you can do it faster, and you can do it more cheaply. It also gives you privacy. And this is absolutely critical. So Flare is building out three things, and those three things end up in a lot of products. So where we are today, we have two data protocols, the Flare Time Series Oracle, which delivers pricing and delivers up to 1,000 prices every 1.8 seconds. So that's embedded into a network. Every validator takes part in it. We have the Flare Data Connector, and this is an Oracle, but for different non-price data. So event data, what has happened on another blockchain, and Web 2 data, which is, if you're looking at a database, has there been a change in that database? Can I prove that to the network in order to do something interesting? So using these two protocols, we have built F-assets, Fxrp, which is what we're known for today. So Fxrp is your XRP on Flare, and it leverages these two data protocols to build that, which is why we built the data protocols first in order to build Fxrp. So what is Fxrp? Fxrp is your XRP on Flare. It is a one-to-one representation of XRP within our blockchain. We aren't creating spurious units of XRP or, by some kind of magic. For every unit of XRP that is minted onto Flare as Fxrp, a unit is deposited on the XRP ledger. So it doesn't increase supply. It's just a mirroring of the asset effectively onto Flare so it can be used within Flare's compute environment. It's non-custodial. We over-collateralize the entrances and exits for safety. And you can look on-chain at any time and see that the amount of Fxrp that exists is exactly the same as the amount of XRP that has been deposited, meaning it has total transparent solvency. So this is an overview of the Fxrp system. This is an old number of circulating supply. We are now at about 104.5 million units, which is quite nice. So I think, the system, we started on the 24th of September. It's grown massively. It continues to grow every single day. We get in about 500,000 to 1 million to 2 million XRP, depending on the day. So Flare at the moment is effectively the largest non-XRPL ecosystem for the use of XRP. On-chain activity. Yeah, this demonstrates effectively how it's growing. From our perspective as having built this chain, and launched it and come up with what do we want to do with it, this is proof of product market fit. No one has come close as yet to replicating the amount of XRP that is in any other ecosystem other than the XRPL. So total supply is now 104 million, and with about 80% of it actually utilized on a daily basis in DeFi. Our top 3 markets are actually 2 XRP markets. So Fxrp, staked XRP, which I'll come on to in a minute, and USDT, which is our stable, although we are very keen to have RLUSD on Flare. So this describes how the DeFi metrics have moved over time. 214 is a little overestimation right now because the dollar price of assets has fallen. But the number of units of assets that we have on Flare continues to rise all the time. Our DeFi ecosystem is very wide and very broad. We've had about 2.5 billion of DEX volume in the last year. And as we added Fxrp only in September, we think that DEX volume will increase really quite dramatically. And so we've had about a 600% year-on-year growth in the ecosystem. So what can you do with Fxrp on Flare? So we try to cut this down into various different categories of things. So your basic things are DEXs, a bit like the XRP DEX, the DEX on the XRPL, but more of them, different types of risk strategies. Perps, you can use XRP to take a derivative position in an asset of your choosing. Money markets, you can lend your XRP or you can borrow dollars against it. Both fork of Compound called Kinetic and Mystic, which is a more recent protocol but has seen huge institutional traction. You can create a stable coin directly from your XRP. So decentralized stablecoin. You can deposit XRP and you get a stablecoin out. And when you want to undo that, you just pay back the stablecoin that you effectively borrowed against your XRP. We've also extending Fxrp onto other ecosystems. So we've launched spot markets for Fxrp against USDC and USDH on Hyperliquid. It's getting quite nice volume. Our goal is for Fxrp to be effectively the ubiquitous version of XRP on other smart contract chains, not only Flare. And then we've incubated an application called Firelight. Firelight is a DeFi coverage protocol. It allows you to effectively stake your XRP without having to do anything else. And they provide DeFi coverage for applications across the ecosystem. This is absolutely critical to institutional involvement in DeFi. So it uses XRP to provide coverage across the ecosystem for which you get a yield for the use of your XRP. And then lastly, we've tried to make it much more simple by providing vaults. So all the stuff on the left is things you can do, but it's quite complicated. If you want to be able to enjoy it, but you don't want to have to do all the transactions, make your own strategies, think about monitoring your collateral levels and all that kind of stuff, you can put it in a vault. And the vault goes and effectively does that for you through people that manage that on your behalf. Critically, unlike other vaults, the vaults are only able to do on-chain strategies. So it's all on-chain. It's not taking your XRP. It's not putting it on a centralized exchange, trading it, and all that kind of stuff. It's a vault that is for on-chain strategies only. So one of the things we've worked very hard at is, okay, you've got 2 ecosystems. You've got the XRP ledger and you've got Flare, and they're a bit different. They have different tech. They have different ways of doing signing and all that kind of stuff. So you have to provide bridges between the two. Wallets are those bridges. We started with Bifrost. We've also incubated Luminite. Oxen Flow has been built. We've tried to integrate Ledger and Trezor. But most importantly, today we introduced smart accounts. And I'll come on to that in 1 second. But we've got about 853,000 active addresses, on-ramps and off-ramps in 50 countries. So smart accounts, what is this? Smart accounts are effectively using Flare with your XRP and potentially other assets from the XRP ledger over time without ever having to touch Flare. You use your XRP wallet, the one you want to use, which is, at the moment we're supporting Zaman, and you make a transaction on the XRP ledger. And it acts as a remote control for Flare. So you never have to touch Flare. You don't need to own Flare. You just make transactions on the XRP ledger. It uses Flare's data protocols to pick up those transactions, and it submits it to a controller account on Flare. And so this means effectively the UI for Flare with regards to XRP is pretty much the best UI you will get for any use case of XRP off of the XRP ledger. It's non-custodial, it's secured by our oracles, and we're using it in order to build new products and effectively a yield product. So today we launched this with Zaman, and we've already seen, I think, $2.5 million of additional XRP onto Flare. With one functionality right now, only one, you can deposit to the Upshift vault, which is a yield product. We will be increasing the capabilities of the accounts over time so that eventually you'll be able to do any transaction that you could do on Flare, you'll be able to do it directly from the XRP ledger. And coming on to Firelight, which is kind of like the big staking protocol that we've been discussing. It launched with a cap. It got 48 million in less than 24 hours. It allows you to effectively take your XRP, stake it to Firelight. They provide cover to blue chip protocols, Aave, Morpho, and those kind of protocols. You get the yield out.
Why are you still paying interest on your credit card balance when you don't have to? A balance transfer card with 0%.
For institutions, we've built out a full institutional stack with Hypernative providing risk monitoring and DeFi coverage, Firelight's sister company Centura providing further risk monitoring. For compliance and analytics, we're embedded with the best people, Chainalysis and Elliptic. We've onboarded pretty much the largest digital asset custodians. So that is essentially a summary of where we are today, what you can do with your XRP on Flare. And now, really, I want to come on to what we're building, which is we term Flare 2.0. And this is an effort from us not only to do more with your XRP, but to expand what can be done, not just with assets from the XRP ledger, but more generally with blockchains. So to give you an understanding of what Flare 2.0 does, is we're building a compute layer on top of Flare. So Flare itself is a blockchain. It runs a compute layer. We're then building an additional private compute layer that sits above Flare. And it essentially extends Flare into a set of hardware called trusted execution environments, which combine privacy with verifiability. The nice thing about trusted execution environments is that you can upload code to them. You can be sure that the code that you want to use has run, and you can verify that it's run properly. And this is effectively a very, very important aspect of what blockchains do today, which is that you know that when you use an app, you are using a particular code base. And that's critical when it comes to things like, to give you a really simple example, let's say you're trying to price a risk in insurance, or you're trying to price something and you need to use a model, a risk model. Now, imagine if you went to a server that had no verifiability. You'd be using a risk model which could have changed since the last time you used it. With trusted execution environments, when you use a piece of code, You know it's the code that you want to use, and you know it's operated correctly. So this then gives us a huge amount of things that we can achieve with trusted execution environments. So the first thing we're building with this is effectively what we call protocol managed wallets. These are wallets on any chain. Most immediately will be XRPL, that can leverage Flare's compute and Flare's compute environment to do whatever you want. But these are effectively an address on a chain that the funds in that are associated with that address, they are managed via a protocol, not via a person. So an application that sits either on Flare or Flare's compute environment, where effectively the funds can be administered. So I'll give you some examples of how that can work. So one of the first kind of use cases we think of is regulated real-world asset trading. So imagine you have a real-world asset that is issued on the XRP ledger, and you have 100 counterparties that would like to be able to trade it together. So that asset can sit in a protocol-managed wallet. They can trade it over on Flare, and that protocol-managed wallet can only respond, i.e. send out assets from that wallet, in response to a signed authorization from Flare's compute. So it tracks the state of what has happened on Flare, and it signs an authorization that says this person is allowed to remove, let's say, 100 units of a stock from the protocol managed wallets. And it's authorized by Threshold, which is managed by the Flare network itself. So that gives you private trading and then public settlement, either settlement on Flare or settlement back down to the XRPL. You can use any form of price matching that you want. Trusted execution environments give you the ability to build effectively a very wide spread of different things. And you can embed as much compliance as you like into it. So it's a really great substrate for institutional involvements in Flare, which means that it's a really great substrate for institutional involvement in assets that are issued on the XRP ledger. So money markets, private, compliant, incredibly important. Not something that you can achieve today. There is no, as far as I know, no fully private and compliant money market that exists in the industry. That will be able to be built on Flare, and it'll be able to take in assets from the XRP ledger, XRP, real world assets, RLUSD, and you.
My boy Hugo needs to study the Canton network.
I know. I was like, wait a second. What did you just say right now?
That didn't register with my ears because what he just said is false.
Yeah, bro. Yeah.
Anyways, back to this. It's got a couple more seconds, so we'll let it play out.
Can borrow and lend that between each other, and then settle back down to the XRP ledger. This is kind of an example of how it works. It's a little complicated, but effectively it leverages Flare's confidential compute technology to achieve that. So I want to summarize. I'm missing a slide. Flare today is a very strong DeFi ecosystem for XRP. And our goal with what we're building is to make sure that the XRP ledger stays up to date with what real-world assets can be used for. They've just issued MPTs, and they've just created an escrow for MPTs. We want to be able to facilitate at Flare effectively complex transactions for real-world assets that are issued on the XRP ledger. So thank you very much.
Alrighty, everybody, what is going on? Welcome back to another Friday Wealth 28 Club podcast. In today's breakdown, we're just going to be going over some DeFi protocols, discussing and talking about some institutional and regulated platforms. We're going to talk about XRP yield generation. Aqua's going to give a little bit of a presentation of a platform that we've been paying very close attention to. In last week's call, we touched on the Soil platform, another regulated platform on the XRPL, where you can earn 8% yield on your RLUSD stablecoins. Today, we're going to be discussing and talking about this Upshift platform. And I also have, to go hand in hand with Aqua's presentation of the platform, some video clips from the co-founder that, in my personal opinion, just show the trust that institutions have in the platform, coming directly from the co-founder of Upshift. So we'll get into that as well. And then obviously, of course, we got to talk about Metal blockchain, Marshall Hayner. Aqua's got some stuff to share with you guys about the credit unions. And we know that MetalX is the only on-chain BSA compliant decentralized finance platform in the world. And so here in the Wealth 28 Club, we've been shifting our focus quite frequently over the last year to regulated platforms and positioning our capital, if we are going to be positioning ourselves in DeFi, on platforms that are regulated, that are compliant with the regulatory requirements in this ever-evolving space, and that meet the needs of institutional investors. And then last but not least, once we're done that conversation, I'm going to roll over and discuss some ongoing happenings in the Canton network. We just had a new listing. And then I also want to cover this post from this gentleman, Zach CLG, Chainlink God. He said something very interesting that I actually agree with, that Eric recently highlighted in a podcast from the roll-up just 2 days ago. So I want to hint at that as well in today's video breakdown. But outside of that, that's what we're going to be touching on. If you guys enjoy, if you're on X, do us a favor, repost to the stream so we can get more viewers on, more like-minded individuals like yourselves watching today's Friday podcast. If you're over on YouTube, shout out to you guys. We'd love to see the comments in the chat. Outside of that, though, Aquaman, Grand Rising, brother, how are you this Friday?
Yeah, Grand Rising, brother. I'm good. How you doing, bro?
Phenomenal, man. This week was very nice.
yeah. On the trading side of things, I'm sure that's what you're referring to.
100%.
I'm actually I'm in a trade right now. I took a position on Bitcoin, a short position, and yeah, I'm just in pure profit at this moment, just watching it. So
it's so lovely, man. It's so lovely. I'm gonna really sit down with Mr. Man over the next consecutive couple of weeks and try and get him trained up on the CyberX 2.0 and get him, just really tapped into the institutional dark pools and deltas that we have on XRP, so we can really, he's a very loud voice in the XRP community, and we just need more people to really hone in on not paying attention to these bullish Moonboy price predictions and all this bullcrap that exists out there in the influencer space in regards to XRP, and really just honing in on accuracy. So I'm super excited. Yeah, this week, bro, was nuts for me in trading. I made over 100K this week alone. So.
Yeah, bro. And that's peanuts compared to some others too, what they're making, like Scalper.
There's in our community this week that made $375,000 in one trade.
Yeah. It's very rewarding. Got to tap in. So
all right. I want to start here before I pass the sticks back over to you to go over the Upshift platform. And then, I don't know how you wanted to do it. Honestly, the way that you broke things down yesterday during our call with the private community was A1. So if you want to just run that, but I wanted to bring this up here. Upshift posted this and they said, as more institutions come on chain. Hold on, let me ask. Do you want to do the Upshift breakdown first? Do you want to do the Metallicus breakdown first and the video clips that you played yesterday?
Let's do this one first, the Upshift first, and then we can jump into those clips for sure.
Well, then I'll play a little video clip from this lady. So Upshift posted this and it says, as more institutions come on chain, flexible vault infrastructure matters more than ever. With Upshift, vault managers can run strategies across DeFi and CeFi, launch 30-plus chains like Ethereum, Solana, deploy capital, and generate yield on 80-plus different protocols, and remain fully non-custodial. And then they posted this little tiny clip. The co-founder, Aya, I believe her name is, she's also the CEO of this organization called August Digital. And she's the co-founder, of course, of Upshift. And I remember something that she said on the Block podcast. And shout out to the block, obviously, of course, for this podcast, but just listen to what she says about how the institutional interest in DeFi is like massive. It's massive, and all institutions are focused on either building out DeFi, possibilities, or they're interested in participating in DeFi. Take a second here and just listen to what she says before Aqua gives his breakdown on Upshift.
Those conversations have sped up dramatically, and almost to a point where it feels like every person I'm speaking to on a call, because these conversations now went from, oh, I can't have this discussion, to let's have all of the discussions. And we're all exhausted because suddenly the tap has been turned on again, and everyone wants to start a DeFi project, some sort of initiative, where even if they fork something
internally at these CeFi firms,
at banks. I'm talking much broader. I think a lot of the banks that we've spoken to are already engaged in DeFi in some way, shape, or form in a permission sense. And so, every bank, every large bank has someone tasked to work on this. And now those conversations are just sped up.
Every large bank has someone tasked to work on DeFi. That is such a massive statement, an eye opener if you're not already educated and participating in DeFi. At a minimum, that should be your wake up call to get educated.
Yeah, I love how he hit her with the bullish silence. Like, funny you say that. Banks, huh? You can see the excitement in his eyes.
So that goes hand in hand with this post where they said, as more institutions come on chain, flexible vault infrastructure matters more than ever. And so, this post, full circle, will come back to this podcast once Aqua's done his presentation. This co-founder of Upshift was also this. Her name is Aya Kontorovic. I'm probably butchering that, but she was also on a podcast just 2 weeks ago from the Crypto Builders of New York City podcast. And this only has 38 views, bro. And she says some juicy stuff here. So I'll let you have the floor here to do the little presentation for everybody on the Upshift platform. And then we'll listen to what she has to say from this. So I'll stop sharing my screen real quick.
Yeah. All right, cool. Yeah, so not financial advice, of course, right? But this protocol, that you can see my screen, right?
Now you got to bring it to the stage, bro.
Hold on, where did we go here? Let's see here. Wait, it says it's up on the, hold on, let me reshare it actually. How about now?
Nope.
Is there something on your end that you have to approve? Because, oh, there we go.
There it goes.
Yeah.
It was lagging a little bit.
Okay. All right. So again, not financial advice, but this is the protocol Upshift. This was on the backdrop in the video that we started with Hugo Fillain. And yeah, when I came across Upshift, I didn't realize Fxrp had a vault over here. What really drew me over here was the total value locked, which is basically, damn near 400 million, right? So I was like, let's go see what's going on over here. And right when I came over here, I was like, yo, they got Fxrp, like, because I remember talking about Fxrp, kind of got put on the back burner. And, until just this past week coming across this, I was like, yo, this is actually, another potential opportunity to earn yield with our XRP. Now, this vault is filled. That's the unfortunate part. It says cap filled, but 3.46% to get on our XRP. And you can see there are some zero shy people, zero shy folks. 35 million total value locked is quite a bit in XRP, right? To get locked up. And we didn't really hear too much about it, really from anybody. So, yeah, and let's face it, a lot of us XRP holders, we've been holding XRP for many, many years, and there's zero opportunities to earn yield with our XRP. To see this 3.5%, I was extremely excited, right? So basically, what did I do here? I connected my Bifrost wallet. So you can connect your Bifrost wallet if you have a Bifrost wallet. You can go through the wallet connect. You could possibly maybe use other wallets, but I used the Bifrost wallet, and I was like, all right, what would the route be? Once this, this vault opens back up, I was like, what would the route be for me to get some Fxrp in this vault? So let me just break that down for you guys here. So Hugo actually went over it on the video that we started with here. Hold on, let me share this tab. So you got a couple ways that you can go about doing it. So I connected my Bifrost wallet directly to F-Assets' website, where you can mint your XRP into Fxrp, right? Now, there are going to be some fees. I don't know exactly what those fees are and what they will entail. I guess it depends on the amount and the time of day. But as you guys can see, there are fees because some protocols like Metallicus, for example, if you were to mint your stablecoin over on Metallicus on MetalX, there are no fees, right? So I was like, I wonder if it's the same thing with F-Assets in this whole ecosystem. And it's definitely not. They have the fee breakdown. Where's it at here? The fee breakdown right here in the minting process. It's basically, yeah, here we go. Here's the fees right here. Now, I'm not saying these fees are going to be extraordinary, right? They can be, fractions of a fraction of a penny. But the fact is that there are some fees. Now, that's option number one, to turn your XRP into Fxrp. The other option is you can connect to this protocol like Enosis, right? Where they got many different products over here, farms, liquidity pools, borrowing and lending, I believe, is coming as well. And you can swap over here. So you can swap, you can connect your Bifrost wallet to Enosis, and you can swap your XRP into Fxrp. Now, the one thing I would say be fully aware of is the slippage that you're going to possibly, accrue when you're going through the swap process on Enosis and any other DEX. So be very careful for your slippage, because I've seen some people make some crazy mistakes with swapping, not paying attention to their slippage, and they lost like 50% of their bag. So be very careful. And again, like I said at the beginning of my presentation, not financial advice. You guys, you want to use your own discernment, and you really want to be tapped into a community like the Wealth 28 Club, where you can understand DeFi, and you're not just, putting money out, and they can potentially turn into grenades and blow up on you, and you lose it all, right? So tap in with a community where you can learn this this information, like what impermanent losses and all that jazz. That's the reason why we created the Wealth 28 Club. But yeah, basically that would be the route to turn our XRP into Fxrp. And once this opens back up, we can come back over here and deposit our Fxrp and take advantage of, whatever the rate is today. It's 3.5, maybe in a year from now, it goes up 5%, maybe, who knows, right? But Upshift seemed pretty legit. It was very smooth, like just connecting my wallet. And they have other, vaults over here that are open. And, what we rant and rave about is these stablecoin positions, right? That's what we love inside the Wealth 28 Club. And some of these vaults, paying out 7-8%. That's pretty solid. So, yeah, that's pretty much it for the presentation on this platform. And again, not financial advice, guys. Use your own discernment, and don't be blindly using DeFi without really understanding what you're doing.
Can you go back to the Upshift platform real quick? I want to touch on a couple of different things that you mentioned, because they're just going to go hand in hand with what the co-founder, Aya, is going to say to you guys here in just a second. So you touched on the fact that this platform caught your attention because of the TVL. Can you just zoom in on that TVL and show people where to find it? Because this is a very serious number, believe it or not. Even though in regards to the size of traditional finance, it's peanuts. It's not even a little blip on the screen. But, when it comes to TVL on a DeFi protocol, this speaks very loudly of the protocol, right? Anything 50 million plus speaks loudly, in my personal opinion, on a DeFi protocol. But we have to understand this $397 million that you all are seeing right now, this is not retail. This is not retail funny money. Like retailers woke up and they're like, hey, I'm going to go earn some yield with this protocol. No, this is institutional interest. And don't take that from me. Take that directly from Aya, where she goes on to talk about that. So I'm going to come over here to this podcast real quick. that she was on just 2 weeks ago. This is Aya, the co-founder of this Upshift platform. And listen to what she says here about institutional adoption of vaults.
So I think you're definitely seeing stablecoins push that, narrative.
So Aya, something that I've noticed in the realm of institutional crypto is that vaults are a really hot topic. And so I'd love to talk to you about how August and Upshift fits into this landscape.
Yeah, you're exactly right. Vaultification, we've been talking about this since 2025. And it's wild because it's been less than a year that we've really seen that term getting coined and used more broadly. And I think it's because of the ease in which it makes, whether it's back office, middle office, and front office, seamless in terms of, structuring assets and deploying capital on chain. And so what we've seen is it creates very little overhead to be able to, deploy a strategy, let users deposit into a vault structure, and then being able to make that composable in the DeFi and crypto environment. And that's the big unlock because, historically, what would happen is assets get tokenized, but then they sit idle once they're on chain, and you really don't unlock the composability that makes DeFi so unique. And, I talk with a number of people on this because, DeFi isn't always the cheapest option, but for some of these maybe longer tail assets or RWAs where money markets don't exist yet or lending markets don't exist yet, it's a really great step to be able to underwrite and borrow against. And so that composability is a huge unlock. And so we've seen vaults play out with Upshift offering, whether it's the accounting, and that's incredibly important in real time, in-house, the entire structure across 30 blockchains. We're today the only vault provider that is both live on Solana, EVM, and a number of other chains. Do full CeFi and DeFi. So today our vaults will cross margin. We'll have clients who are trading in DeFi, trading in CeFi, in walled garden accounts, and we're able to run the accounting real time for that, as well as options trade. If you're doing something OTC, we're able to print the accounting for that. And so a lot of that, as you mentioned, August, a lot of that sits on a risk framework to be able to underwrite the assets, calculate the price of the assets, and then create the Oracle redundancy. And so that's where the August kind of prime stack will sit. It really holds the tools to be able to underwrite over 800 assets across all of these different platforms, whereas Upshift is really, really focused on what is the flow of funds, what is the user experience, how are these B2B2C platforms integrated with us via SDK or APIs, and then what is the end user product going to look like? And today, what we've actually noticed is it's predominantly been white labeled, and most of our deposits actually happen through partners versus direct. And so that's been very interesting as well. Vaults really sit kind of in the back, behind the scenes of just Earn. And what does Earn look like today?
So I'd love to take a step back.
Yo, so did that mean Upshift, this vault is technically white labeled, and
Bro,
the 35 million came in from so many different angles?
Bro, what she just said, pretty much in a nutshell, is that these vaults that they provide are infrastructure grade for institutions. They're built for institutions. And because you just mentioned that 35 million, I want to go back to, you stop sharing your screen, but I want to go back to the Upshift platform real quick. Can you bring that back up to the stage? Okay, let me stop sharing this screen. Okay, so there's $35 million, right, deposited in the Fxrp vault, okay? And this is not, again, retail money. Now, I'm not saying that it's all institutional money because it's clearly only $35 million. But your everyday average retail investor, if you look at the statistics in the document, doesn't have $1 million portfolio, if even a 5-figure portfolio for most retail investors. So these numbers are institutional allocators that are dipping their toes in DeFi. And I want you guys to listen to what she says here again, because she specifically says that institutions trust us. We have institutional depositors. Okay. So I'm not just making this up. This is her confirming this for you guys. Take a second over here. Let me reshare my screen and listen to what she has to say.
And have you talk about your journey from being a part of the Falcon X founding team.
Abilities is really reflective of you as a leader, but also the company in terms of its ethos and its culture. And so, yeah, I'm incredibly proud of the team, incredibly proud of, the clients that have been with us through thick and thin. I think that is just a testament both to the product, but also to the people. There's a lot of trust that our clients have with us. And interestingly, we have seen a lot of our institutional clients become some of the largest depositors on Upshift. I think oftentimes you look at these retail vaults and you say, okay, these are retail driven products, but for the most part, they have actually been a lot of our institutional clients that have tried some of the products on the other side because they trust us. They know we're not going to, rug pull, as maybe an Eric Adam might do, or
Yo, so check this out real quick. All right, so check this out. Let me share my screen again. What she's saying is not capped at all. And this vault is white labeled. So let me show you guys because I just figured out something right now. So
Are you
let me
sharing
show
your screen?
you. Yeah, let me just share my screen one more time here. So this is the FXRP vault, right, on Upshift, 35.25 million. Now check this out. Let me share this tab instead. This is Firelight, the same vault, 35.25 million. And look, when you enter the vault on this side from Upshift, you get Upshift rewards and Firelight points. But if you come through just through Firelight, looks like you're just getting your, the Firelight reward points or whatever. But 35.25 million. So this vault is the same vault, basically, is what I'm trying to prove, right? And these institutions most likely came in from some other like route, but to the same vault, but they just didn't give it to us for us to see it and make it available to us. The way that we can get into the same vault is through Firelight or through Upshift.
Yeah, so they have some way on the back end, and our route is through these DeFi protocols. Bro, I'm telling you, this is clutch. The fact that she just said, surprisingly, most of our clients are actually institutional investors is huge. And she said, because they trust us, which just leads into the ethos that we've been trying to follow of only participating in regulatory compliant DeFi protocols to really protect and preserve our capital, especially considering the ongoing regulatory happenings in this space. And Upshift, in my personal opinion, based on what we're hearing, based on what we're seeing, is one of those platforms that falls in the regulatory compliant category, right? Last video I'll play from this lady, she goes on to talk about institutional adoption on DeFi within banks. Take a second here and listen to what she has to say.
mainstream. And so it's going to mean a really interesting year for these products.
So Aya, what would you say to naysayers who say that retail crypto is on the decline? I think I saw some stat around the search term for crypto on Google being at a 1-year nadir.
Yeah, it's a great question. At the end of the day, adoption happens whether it's on the retail side or the institutional side. And so while it may be at an all-time low for the retail, Google searches, that is absolutely not the case in terms of the adoption we're seeing on the institutional side within banks. And so, I think at the end of the day, if you think about, some of the
Bro, she said that is absolutely not what we are seeing on the institutional side within banks. So if you're a scared retail investor right now to get into crypto, these banks, man, I'll tell you what, when they get that green light and the sentiment shifts back risk on, me and Aqua have been saying it so long. We are about to see a bull run, the likes of which we've never, ever, ever seen before in crypto. And these prices that you're seeing right now, once these institutions finally come in, you're not ever going to get the opportunity to buy sub 2.5, $2.3 trillion market cap ever again.
Never again, bro. Never again. Can you imagine when there's, who even knows, hundreds of, potential possibilities to earn yield on the XRPL and other chains that these institutions have access to? in the double digit, because we've also heard that double digit yield is going to be the norm in the future as well. These institutions are going to be flocking in. So retail, it doesn't even matter. You know, I heard this, man, maybe you've seen it too. David Schwartz was just on stage, I think in Australia or something like that. But he even said too, he was like, yo, like, it doesn't even matter if retail doesn't want to jump into DeFi. Institutions are going to be flooding in now. It doesn't even matter what retail wants to do or their opinion. I'm paraphrasing what he said. That's not probably verbatim what he said, but that's along the lines of what he was saying. So
we know that there's a company that's an X-Ripple representative launched, Ashish Burla launched Evernorth, right? Which is an XRP treasury company. And my prediction is that come year end, and I'll throw it out there, 2027, we're going to see 10 plus XRP native treasury companies with a sole focus to just accumulate the crap out of XRP and earn yield on it. And it's not just going to be XRP, it's going to be a multitude of different digital assets. Canton, XRP, obviously, of course, Solana. There's already treasury companies for Solana. Metallicus, like there's gonna be so many opportunities for these institutions to hedge against the volatility of these digital assets. And when they get the green light to house more than 2 to 5% of their balance sheet into crypto, oh my God, man. And that day is coming. That day is coming. And you don't want to be involved in crypto after that happens.
You know, and I'm just gonna give my speculation opinion right now, but based on what she just said right now, her name is Aya. I could only imagine, like, so she's basically said that these institutions are mega bullish, right? Now, I could only imagine what some of these institutions that are already working with Metallicus, which is the only BSA compliant ecosystem in the entire world. I could only imagine how bullish these folks are if these institutions on that side of the fence are already using DeFi. Again, I'm just use your imagination. And one of the video clips that I'm going to play today, once we get on the topic, which we're probably going to get on it right now, but you're going to hear the CEO of St. Cloud Credit Union get extremely bullish on DeFi. And he even talks about a flip of the switch moment, which is extremely bullish as well. But yeah.
I don't know if you have the clip of Marshall Hayner saying what he said here in this Twitter post on March 12th, 2026, that MetalX is the only on-chain BSA compliant decentralized finance platform in the world. He just recently said it at the GAC event. But this just goes hand in hand with what we're in an attempt to try to show you guys that DeFi is not the uncertain, uneasy, crappy user interface experience that it was even just a year ago. It has matured. It has changed substantially if you are operating on platforms that are regulatory compliant, like Soil, built out on the XRPL, first fully regulated DeFi protocol on the XRPL, confirmed by Ripple themselves. You got Upshift. You guys just heard the CEO and the co-founder of August and the co-founder of Upshift talk about, you know, how institutions are depositing on the platform because they trust them. Here you have Marshall Hayner talking about the MetalX platform and the loan protocol and how it's BSA compliant. And then we're going to show you guys right now, I'm sure Aqua probably has pulled it up, at the CU broadcast interview from the GAC, Marshall comfortably said this on a panel discussion. So it's not hidden information anymore. We just have to really, truly unlock our way of thinking. And instead of thinking in terms of fear, uncertainty, and doubt, start thinking in terms of long-term strategy. How, while this market is in this bear market cycle or this pullback phase, whatever you want to call it, can we accumulate more shares of these digital assets so that way we can come out on top when the market does turn around by having more shares of these blue chip digital assets by using the market's money and just compounding every single day, generating yield on assets we're already holding and taking that yield and just stacking it back on top every day in this repetitive loop. So Aqua, go ahead and let's hear what the gentleman from St. Cloud and Marshall Hayner have to say in those two posts that you were talking about.
Yeah, it's actually a few posts actually. So yeah, we'll see where the conversation goes though. All right, let me share my screen again. Hold on. All right, you can see my screen?
Yeah.
All right, cool. All right, let me blow up this video. So this is a 5-minute snippet. I'm not going to play the whole 5 minutes, but I definitely recommend everyone who's tapped in right now, come watch this video in its entirety. It's super, super bullish. But what I really want to focus in on right now is what's the topic that we're talking about? DeFi. Listen to what Jed Meyer, again, the CEO of St. Cloud Credit Union, has to say about DeFi.
Banking Bitcoin by the end of the.
Let me find the snippet. Let's see here. All right, tap in, bend your ear. Really pay close attention to what he says right now.
Also testified. We're hoping to get that custody down, testifying at the here locally. And then as custody becomes the next conversation, which it is, we're actually, my EVP Chase Larson's actually down testifying at the state Senate today in Minnesota on a bill for custody that passed the House unanimously last week, where he also testified. We're hoping to get that custody through. Our Department of Commerce supports it. The Bankers Association supports it. The Credit Union Network has really led the charge for us on this, the Minnesota Credit Union Network. And we're hoping to get that through, because as soon as that happens, Mike, my vault, which today is off balance sheet self-custody for the member and allowing them to use my data and my infrastructure, I can actually flip a switch and turn that vault into custody. And when I'm able to do that, I now have Bitcoin-backed lending to CD products, to redeploying that liquidity.
Let's run it back.
On this, the Minnesota Credit Union Network. And we're hoping to get that through, because as soon as that happens, Mike, my vault, which today is off balance sheet self-custody for the member and allowing them to use my data and my infrastructure, I can actually flip a switch and turn that vault into custody. And when I'm able to do that, I now have Bitcoin-backed lending to CD products, to redeploying that liquidity if I choose to back into the community, leverage it for loans, and really build out the rest of the use cases you hear everybody talking about. Versus me.
DeFi use cases, right? What he just named was all of DeFi, collateralizing your Bitcoin, borrowing and lending, a CD as well. We're probably going to see in the future these credit unions offer a CD account for double-digit yields, right? So yeah,
you know, my mind is blown, because he said the key word, flip the switch, when these credit unions want to flip the switch on, and that goes hand in hand with what this gentleman here from freaking Investify said in November of last year. Let me share my screen right here. When he was talking about how when these credit unions are ready, we can turn on, right? We can turn on certain assets, Bitcoin, Metallicus is coin. If the credit unions want access to them, we can turn it on. So there is, again, this whole notion of flip the switch. We understand that there's no like actual switch, but metaphorically, they are prepared that when these institutions and the regulatory environment are fully ready for it, they will be able to offer these turnkey solutions for their clientele. And this is freaking huge confirmation that we should be paying attention. Listen to what this gentleman from Investify says here.
We have thousands of members using the product. We have real data to show on the adoption and volume that's flowing through our platform, which is material. We have real ROI that we can show with that real data. And so, you know, that's really what we're so excited about now, is the Genius Act and that enabling this new dynamic of stablecoins, while it still is likely early in the United States for anyone to be using stablecoins for a mass retail product. We see the world going in that direction, and it is being used more outside of the United States for just, you know, for retail. I think a lot of people agree that there's value in cross-border payments for stablecoins, but eventually in the United States, there's going to be more of a push to using stablecoin for retail payments. When that's going to be is likely a function of when rewards mechanisms kicks in and companies that will actually pay members or users for using stablecoins, just like we see cash back on cards today, right? But when that happens, we're already going to be there to support it. You know, with our partnerships that we have in place, we're multi-custodial now too as well. We have our primary custodian is BitGo, the second largest crypto custodian in the world, only behind Coinbase. And the big difference between BitGo and Coinbase is BitGo does not compete direct to consumer. So BitGo is only B2B, right? Coinbase is eating credit unions' deposits for lunch. And so, you know, we want to work with partners that can enable credit unions and not compete with credit unions. And the great thing about BitGo and their scale is they're able to turn on new coins as they come into the ecosystem. And so we just announced yesterday a partnership.
I'm going to keep playing it, but he just said our partnership with BitGo allows them to turn on new coins. Okay.
100%.
He specifically said that word, turn on. That's the same terminology as flip the switch, right? Listen to what he says.
Facts.
With Metallicus, and so we're not out there pushing Metallicus's coin for sale, as they're able to turn on new coins as they come into the ecosystem. And so we just announced yesterday a partnership with Metallicus, and so we're not out there pushing Metallicus's coin for them, but if credit unions want to use it, we're happy to support it, because we can do so turnkey, very seamlessly, where credit unions doing implementation with us can just tell us what coins they want to turn on, so they can turn on USDC, USDT, Bitcoin, Ethereum, and then if they want to turn on Metallicus's coin, they can. And so,
bro, what does the future look like when these institutions say, hey, we're ready to turn these coins on?
Trillions, bro. Trillions is what it looks like, bro. Trillions.
I tell you what, I will be a market participant when that day comes.
Yeah, facts, bro. Facts. And we got Marshall saying that potentially is going to be happening in 2026 with his recent prediction.
I shared that video of the gentleman from, if you want to talk timelines, the gentleman from the Bretton Woods Committee saying that in the next 12 to 24 months, you will see the Federal Reserve ready to offer crypto solutions to Federal Reserve clients.
Yeah. And what do we know? Metallicus is fully in bed with FedNow, bro. Fully in bed.
Did you have any other clips that you wanted to play from this segment?
Yeah. So hold on. Let me find my other clip here. The one thing, too, I'll say is this. Take a look at this post. This is a recent post from Marshall. Now, again, this is just speculation. Nothing is confirmed at all, right? But just a couple days ago, he reposted this CoinDesk post that basically says Wells Fargo files a trademark for WFUSD, which is a Wells Fargo stablecoin, hinting at a potential crypto service of a US dollar peg stablecoin. Marshall decides to repost it and give a little quote from himself and says, every bank, every credit union, every institution, trillions unlocked into DeFi, that's metal, right? And I asked him, I said, hey, are you low-key telling us that you guys are working with Wells Fargo? He liked the post, but he did not respond, right? Which he probably can. I don't blame him. And again, this is just speculation. But when I bring this video up, I want you guys to really use your imagination. And what do you guys think? Because this video, which was, a few years ago, I want to say, listen to what Marshall says. Let me blow up my screen here. It's like 30 seconds. Bend your ear.
Huge Apple fanboy. I'd love to work closer with Apple. I'd love to work with Microsoft and OpenAI and some of these really cool emerging tech companies. But our focus, primarily Metallicus, is the payments and banking side. So, JP Morgan, Bank of America, the too big to fail banks coming on board and working together with us. Our team is so blessed and so excited about, what we're doing, because we are having those conversations. And just like Brandon said, rewind to 2020 or 2017, follow those 3-year cycles. These are things that we dreamt of in 2017. We'd love to have a conversation with JP Morgan, and then we're having one. We'd love to work with regional banks and talk about stable coins and create interbanking networks with blockchain, and then we're having those conversations. Huge Apple.
So, he said that they were having those conversations years ago. Nothing, again, has been announced. It's my speculation, my opinion right now. But I really think that there's a strong possibility Metallicus can be potentially working with some of these big name banks. So it goes even bigger than just the credit unions. So that was the video. Let me just share this video. This is his prediction. Marshall's prediction goes hand in hand with what we're talking about right now.
The market's down.
Whoops. Listen to what Marshall said. This was literally like 2 weeks ago at the GAC 2026. listen to what prediction he gives at the end of this.
So my predictions for this year are, right now, all markets are down, right? We see the stock market is down, crypto market's down. So now is a time when there are a lot of people building. There's a lot of stuff happening in the background. You may not see it because it's not as loud, although I would argue it does feel kind of loud, even though the markets are down. Yeah. Things are going to change over this year where the market goes in up and down cycles. The next, I guess, bull cycle, you could call it, we will have this technology embedded into the credit union. So this year, my predictions are you're going to see the first MetalPay API Metallicus integrations go live in credit unions. Okay. We're going to begin to see the credit union and banking world get much more integrated with this tech. I predict by this year you will see the first credit union and bank-based stablecoins due to the new legislation passing. Right on. We're going to see some winners and some losers. And the losers are going to be the ones that fail to have interoperability and compliance baked into the chain. So I think by the end of this year, we'll see the first credit union and bank-based stablecoins. The Genius Act and Clarity Act, I believe, will pass. I think the guidance from Kyle, from Chairman Kyle Hopman at the NCUA is fantastic. There's some things I have some comments on, but overall it's very good. And I think it's going to go through. And in doing that, we're going to have the next crypto bull run, if you call it, will be the institutional bull run. So it's going to be.
So the institutional bull run. And the one thing that I just caught that I did not catch before in this snippet is he said credit union and bank-based stablecoin. So does that mean credit unions and banks, right? I guess time will tell.
Yeah, bro. And then too, though, another thing, excuse me, he said we will have this technology embedded into the credit unions. Cynthia Lummis was just on a podcast with Arena Birkin the other day, piping up the credit unions and talking about how they are ahead of the traditional banks in adopting digital assets and digital wallets and providing those turnkey solutions to their clients. Are you about to play that?
Yeah, let's play it right now. So this is a snippet from Senator Lummis, right? The big famous Senator Lummis, a bunch of videos of her giving talk track about how great blockchain is and Bitcoin and all that jazz, right? Listen to this sit-down conversation that just happened on X earlier this week. It was like Monday or Tuesday. But listen to what Senator Lummis has to say. She's listen, just bend your ear.
One of the things that Arena said that made me happy was,
and just for clarity, that's her speaking. She said one of the things that Arena is doing that made me happy. Arena is one of the head honchos over at Metallicus, for those of you that don't know.
Her work with the credit unions. And I have found the credit unions approach to embracing digital assets and using them to augment the offerings of financial products to their customers to be far more friendly to digital assets than the banks. And the truth of the matter is digital assets bring a whole new product line to both banks and credit unions that they can incorporate into their current business models. And we'll start seeing banks buying digital asset firms, credit unions buying digital asset firms, and vice versa. The difference is the credit unions are being much more innovative, creative, and receptive. The banks are being resistant and fighting this and not acknowledging just how rapidly in the 21st century we're moving to a blockchain-based and technology-based US dollar and other financial products.
So yeah.
The fact that at the beginning, bro, she gave verbal confirmation that what Arena is doing makes me happy. Coming from a senator, like that sentence alone confirms so many different things. Number one, that what Metallicus is building is, or at least adheres to the appeal of a congresswoman, bullish, and that she is very well aware as a congresswoman in her circle of what Metallicus is building, also bullish.
Mm-hmm. Mm-hmm. 1000%. And for those people who are adamant about calling this a scam or a rug pull, do you really think Senator Lummis is going to have a sit down conversation with a scam or a rug pull? I think not. So yeah, it's time to start being mature investors in the space and really take a look at things with proper discernment and not just adopting weirdo opinions about this ecosystem. So yeah.
All right, well, let's roll over to Canton because we got some juice on Canton to share this week from some of the recent fundamental developments as well. If you guys are watching this on X, do us that favor, repost this stream. If you're watching on YouTube, smash that thumbs up button. Make sure that you're subscribed to both myself and Aqua over on YouTube. We do appreciate the love and the support for you all tapping in with us this Friday. We are having a huge discussion talking about XRP DeFi. We just got done our discussion talking about the Metallicus ecosystem, bullish on both an earning yield on your digital assets. In my personal opinion, in this market downturn is honestly a survival tactic. Like, not only a survival tactic, but a thriving tactic that is going to bring you out on top when this market turns around. If you guys don't know how to get your digital assets working for you, you can always tap in with us inside the Wealth 28 Club. Head over to cyberxtrading.com, take the university, go through the course material. It will only benefit you all to educate yourselves on how to get your digital assets working for you. You don't have to deploy your crypto into the DeFi ecosystem to take the Wealth 28 Club course. You can literally just go through all of the education material and you will be fully mind blown as to how many different opportunities there are for you to earn passive income with your pre-existing crypto bags. With that being said, rolling over into the Canton portion of today's video breakdown before we wrap it up on today's Friday call. Since we're on the topic and discussion of DeFi, I want to talk about how DeFi TVL is starting to ramp up and increase on different protocols and different platforms on Canton. First, starting here with one of the co-founders of digital assets in the Canton network here, this gentleman, Melvin, who goes on to talk about at this base conference that DeFi is going to start to pick up substantially on the Canton network. Take a second and listen.
We have a full DeFi ecosystem that is being proliferated right now. We have people building lending and borrowing, swaps, vault products, all the way to AMM, all the way down to prediction markets.
But do they have to like rebuild everything in DAML, I guess, or is there?
Yeah.
Right. So he's just talking about how there's a DeFi proliferation happening right now on the Canton network, and we're seeing that in real time. This gentleman, Ethan from Send, I believe he is either the co-founder or the CEO of this company, this protocol, or this wallet, I believe it is. But he sent a little tiny screenshots of the total TVL in regards to the liquidity pools that sit on the Canton network. And here you can see a total of $1.4 million in TVL, which is a substantial increase considering that these vaults and these pools just launched most likely. And you can see them here. We have Canton Coin CUSD with a 2.1% APR with over $500,000 locked in TVL. You also have the Canton Coin USD CX liquidity pool now sitting at $360,000 in TVL. And then we also have the USD CX CUSD sitting at almost $500,000 in TVL. So it's just great to see the DeFi ecosystem on Canton growing. And I firmly believe that it's going to continue to grow over the next consecutive couple of years / months. Now, coming over here, some huge announcements this week. LMAX Digital just said yesterday, that they are now listing Canton Coin for spot trading against USD, where they said Canton Coin is the native utility token of the Canton network, a blockchain purpose-built for institutional finance, combining privacy, compliance, and scalability. LMAX Digital is a huge platform, and I think that this just speaks loudly the fact that they're willing to launch and list Canton Coin on their platform that is now available for spot trading. So that was a huge announcement just yesterday. But this one this week was massive. Yorox, hopefully I'm pronouncing that correctly, integrates with Canton Network to strengthen institutional digital gold infrastructure. Myself and Aqua have been talking about this for some time, that we're going to start to see fractionalizational ownership of gold. We're going to be able to earn yield on gold in some places, and on some protocols you already can. that Aqua shared many times with our private community. But this just goes hand in hand with those developments. And it says, Yorox Finance, a next-generation tokenized gold infrastructure developed by Axion Foundation, supported by Alloy X Group, today announced its integration with the Canton network, the privacy-enabled interoperable blockchain network purpose-built for institutional finance. By combining TradFi bullion standards with blockchain-based financial rails, Yorox delivers an institutional-grade framework for digital gold. The integration with the Canton network further enhances compliance, privacy, and cross-border application interoperability for regulated asset workflows. Yorox is designed to improve accessibility, transparency, and global liquidity for physical gold ownership. Key features include ultra-low minimum holding requirements, so you can hold as little as 0.001 troy ounces of gold, which is just huge, and it just correlates with that fractionalized ownership, right? Go ahead. Did you want to say something on that?
That's just really dope that like they're going to fractionalize even precious metals like that as well. I feel like, yeah, that's amazing.
I think that is pretty cool. I mean, just owning a little tiny small sliver of gold, you might not have a whole freaking, what is it, $5,100 or $200 or something crazy right now for a whole freaking full bar of gold right now. You might not have that, but you still might want some exposure to gold.
Exactly.
And here's how you can do it. Global Physical Redemption Network allocated gold custody at a Brinks Vault and institutional onboarding with KYC and AML compliance. Through Canton Network, Yorox gains configurable privacy controls and secure synchronization across financial applications, addressing one of the most critical barriers to institutional adoption of tokenized commodities. So I thought that announcement was cool. That took place at the very beginning of this week, which set the tone for Canton. Now, this post I found very interesting in regards to a podcast that Eric, the co-founder of Digital Asset, was just on. And this is from Zach Reinas. I don't know this dude. I know that he's heavily involved in the Chainlink ecosystem, but he said here, personally, I would never buy a crypto token from a project that has also sold equity to investors. Such double dipping, and we're going to focus on this key vocabulary right here, this terminology, double dipping, creates unavoidable economic misalignment between investor classes and muddies the value of capture story. At some point, the market will force these projects to either merge token and equity into one asset or clearly separate what each one represents. This is one of the biggest structural problems in crypto today, and it is not a discussion that is going away anytime soon. It's not a coincidence that some of the biggest crypto blue chip assets do not have this issue. And Canton, in my personal opinion, based on what the founders have said, is one of them that do not have this issue. So again, we've talked about myself and Aqua portfolio diversification and not just investing in the traditional, blue chip digital assets that have everybody's attention, and to make sure that you have some exposure to other digital assets, again, not financial advice, that may have otherwise gone unnoticed over the past consecutive couple of years, but are now full forced and full-fledged embedded into the space and sitting in the top 20 that a lot of people overlook. And so listening to Eric here and paying attention to that key vocabulary, double dipping, listen to what Eric here says, and it just goes hand in hand with what that gentleman, what's the guy's name here? Zach just said to you guys. So listen to what Eric here says. Also, by the way, shout out to the roll up for this podcast. They posted it 2 days ago and it still only has 800 views. So definitely go check it out.
I don't know that the pendulum is going to swing back all that much, because you have an audience coming in that's just a lot more thoughtful, and they're going to make longer term decisions. Like the idea of just kind of these waves of retail coming in and out and letting people out of their liquidity. They've been taught the lesson too many times that that's not going to work out for them.
Yeah.
Right. So I think that what you're similar to your liquid venture statement, imagine if you're going and raising money in the Valley, you have to make like a credible business argument, even if it's early. Here's what I do. Here's the problem that I solve. Here's how I'm going to capture some portion of that value that I solve. And you're going to get graded on every round through some progression of those metrics, and they may evolve, but the metrics get harder and harder as you go up the value chain, right? They don't get easier.
Yeah.
So I don't really anticipate that if we think that the value of these worlds are going to expand, whether because they're facilitating higher value things or because the tokens themselves are more valuable, that you won't be held to a higher standard as we go. So I actually think it's more likely that the pendulum hasn't swung far enough, honestly.
I like it.
And then, you know, in terms of like, how did we do this? I mean, we launched, you know, Foundation in the US, Pete Gensler hunting heads, digital asset, headquartered in New York City. We have publicly traded financial institutions that were part of the launch. They'd never held crypto before. It's on their balance sheet. You know, we wanted that. Like, we wanted to be an ecosystem that was eligible for people. And one of the things that we said is, well, can I do like a discounted cash flow analysis on the value of the token? What would I have to design to make that possible? And I think that being able to map how what happens in the ecosystem directly translates into value of the token. If you don't have a really strong story about that, then I don't think you really have a story at all. So I actually think that the pendulum hasn't gone far enough. And then, you know, in that regard, you know, there are two things that we really focus on in the network when we think about the success of the ecosystem. And we are not a company. It's not centralized. It's not run by a couple entities. It is truly a decentralized ecosystem. But if you were to think about it like you would a publicly traded company, you would kind of care about roughly two things. You would care about revenues, top line revenues, and that they're growing, right? So for us, that's burn in the network. Fees, every dollar of fees is burned. So that's a one-to-one relationship. That's automatic. That's in the protocol. There's no discretion. Every single time someone uses the network and it has fees, those fees are burned. So that is like a baked in sort of thing. So we're always trying to grow fees or burn, period. And then just like any other company, you would say, well, what's the quality of this revenue? You know, does it have positive margins? Do you have high churn? You know, there are many different ways to think about the quality of revenue. But one of the ones that we're really focused on are like the durability of the things that are driving the fees, right? To pick two extremes, if one is meme coin trading, which we expect to come and go with fads and, you know, be hotter than shit and then disappear at some point in time, it's not very durable, right? We don't really know what the long-term, you know, high water sustained mark of activity.
By the way, that's a call out on Solana subliminally, but keep listening.
And that is on the complete opposite end of the spectrum. Payroll is insanely durable. Maybe there are more companies, maybe there are more employees or less, but that shit happens without failure, right? Bank financing happens without failure. Repo happens without failure because that's part of that bank financing. So we are trying to be as deep into that inelastic side of the curve or that durable side of the curve as we can be. Are we 100% there? No, we're not. We're still, you know, somewhere in between the two. But that is our constant drive and focus, is to push the quality of that burn as far to the right in that spectrum as possible. The reason is that you should get better multiples on fees the further into the durability side of the curve that you are, right? And right now, when you look at these other ecosystems, they're getting insane multiples on fees. That don't even translate to value to the token holder.
Call them out. Who?
I'm not going to fucking
call
name
them out,
the names.
Eric.
I'm not going to name the names because they don't have burn mechanics. That are, you know, you're double dipping. Validators get the emissions and the fees. That's double dipping. That's a classic example of a Bitcoin design decision that leaked into the other ecosystems that doesn't belong. Right? If I have permanent emissions and I have fees that go to the validators, that's double dipping.
Well, then you just can't count the validator.
So he pretty much just called out every layer one out there whose fee structure does not trickle down to the token holder themselves. And what he's talking about is how they plan to drive utility to the network in such a sustainable way, where it's not just meme trading that's driving utility to the network and resulting in fee burns. He's talking about repo. He's talking about freaking payroll. He's talking about all these things that are actually resulting in real economic activity, but then also real economic burn on the network that then result to real value for the token holder. And so many layer ones out there, one of the reasons why we've seen such a substantiating pullback is that all these layer ones out there are generating fees, but it doesn't trickle down to the actual value in the network and the token holder themselves. And that's why all these assets are still being speculatively traded, including right now, unfortunately, the XRPL and the XRP token. Ripple 110%. How he just mentioned the double dipping terminology, that's Stellar, that's XRP, that's all like literally
Ethereum,
say
right?
freaking Aptos, all of them double dipping.
Damn. Yeah, this is I love Eric. I love hearing all his talk tracks. This guy's a brilliant man. Very, very brilliant dude.
Now, that's not to say that in the future, the tokenomics of these networks couldn't change, because they 110% could. But we need to be very careful of our capital allocation in this space moving forward, regardless of what the documents say and what we speculate on. And instead, we really focus on the mechanics of the network that's actually being utilized and resulting in a positive reason to actually hold the token, because the burn of the token and the use of the network actually trickles down to the people that hold the token themselves. Right?
Yeah. I feel like what he just broke down, like one day we're going to wake up and Canton is just going to be one of those scarce assets. The way that burn mechanism works, it's just a matter of time.
Well, listen to what he says here, because what you just mentioned kind of goes hand in hand with what he says here. He talks about we have to wake up from this reality of holding on to something that we've been sold for so many years. If it doesn't actually bring you value, like thinking something is going to bring you value one day and then it actually bringing you value in the moment are two completely different things.
Agreed, bro. 100% agreed.
Listen to what he says here.
Who's running this thing? Is there any censorship resistance? And so you've got this really interesting place to be. What do you have to say to that? Like
you earlier said that Canton is not a corporate chain. You've gone through,
but that is for sure what they would kind of box you in as. What do you have to say to the position of Canton with regards to this kind of gap in sentiment at large in the industry? Why does crypto Twitter hate you guys?
I mean, look, I'll give you a good faith answer, but let me give you a shitty, spicy answer first. It's because they're looking in the mirror and they realize the emperor has no fucking clothes.
Okay.
They're holding something that they can't actually explain the path to delivering the vision that they've been sold. And it's a scary thing to do. Like it's tough to put your own money, your own personality, your own identity into something, which is what these communities have all been great at. It's like sucking up all this sentiment and interest and, gee, whatever you're on, like screaming it every morning on Twitter. Like that's an incredible thing. But then at some point, there's got to be some substance there, right? And a lot of these things don't really have substance. There's so little creativity or iteration over the original idea. Even ETH, which I think has produced an outrageously different outcome to Bitcoin, the design decisions are almost identical.
Yeah.
Almost identical. And I lived through a period, so the way I tell it is not necessarily the way that they felt it or they believe it or any of that sort of stuff. But from my perspective, as a very early Bitcoiner, a Bitcoin maxi, it was always Bitcoin plus smart contracts. And it was proof of work. And it was like, we're going to have sound money, but with programmability. They found product market fit in a very different zone. They found it in DeFi.
Yeah.
But then none of their incentives, none of their design, none of their structure, none of how they think about the network, none of that is built for DeFi. And then downstream of ETH, it's, well, how can we compete over consensus mechanisms? Because it was slow and expensive for a short period of time. There is so little experimentation outside of it. I'm so pumped. I know you guys are hype boys, but I fucking love hype. I think hype is great because it's like, hey, base is completely centralized, so why can't we do the same thing and just kind of, but actually provide value and focus on value and drop some of this religiousness and so it's so interesting to me that where people apply their religious filter, and it's very clearly being applied to us where it isn't being applied in other ecosystems, or maybe you've lived through it a little bit more directly in the hype world where it was probably being religiously hit over the head too for a while until the value was so overwhelmingly obvious that they couldn't ignore it any longer. And I think that the things that will stand the test of time and already have are the things that are pragmatic and deliver value to the user, which is not I don't think that's a hot take at all. Like, why does almost everybody access the network through Binance and OKX and Coinbase or Fireblocks or, MetaMask? I mean, these are all directly intermediated experiences through an institution. Why do they dominate? Because they provide real value to the user. And they do every day, they get better at those things every single day.
Yeah.
So I get it. Like there's.
So that's what he's saying. Honest to God, is one of the reasons why I'm still so super bullish on XRP, is because now for the first time ever, we're finally about to see XRP yielding opportunities. So holding XRP actually has some economic incentive behind it outside of just the speculative $1,000 price prediction bullcrap you see on the internet all the time. Now all the XRP that we hold can finally pay us while we wait for that futuristic price bullcrap to happen. And there's actually some incentive for the token holder. Whereas over the last literally 10 years I've been involved in XRP, the incentive to hold XRP has literally just been speculation that one day it's going to be used as a global settlement mechanism and it's going to be worth $1,000 because somebody on YouTube said so, right? You see how it changes? It changes.
Right.
So, yeah, I thought that what he just said there was great because, again, you know, most layer ones operate in this realm of what he just talked about. And we got to wake up at one point in time in the future, if these things don't change, and stop holding on to outdated narratives and instead focus on what can really drive economic value to our portfolio as retail investors that are holding these tokens so we can make money in the now and not it's some speculative future that we think is going to exist in 10 years from now, right? That's all great and fine and dandy, but what if 10 years comes? Mind you, again, I'll give a perfect example. When I first bought XRP back in 2016, it was because I was following the hype of, oh, it's going to be worth $2,000. And now here I am in 2026. And of course, I've experienced some very nice price appreciation because most of my XRP I bought sub 11 cents. But regardless, it ain't $1,000. And so, you know, another 10 years from now, if it ain't $1,000, I'm not going to be that butthurt because between now and 10 years from now, guess what I'm going to be doing with my XRP? Earning yield. The entire compounding the entire time. So at least to some extent, I will be generating economic value with my XRP while I wait. And I just use XRP as an example because I'm assuming that most people listening to myself and Aqua probably hold that digital asset in their portfolio, and you can relate to what I'm saying. I'm sure that you guys as well are tired of all the price predictions that never come into fruition. And I'm not saying that they're not. I'm a firm believer that one day they will. But while we wait for that, we deserve some economic incentive. God damn it. You know what I'm saying?
That's real. That's mad real.
So, anyways, all right. So I had one more video clip that I wanted to play, but I feel like that rant went on long enough. He goes on to talk about that by the end of 2026, Canton will have, you know, all these things in place. And it was just super bullish, but it's a little bit of a lengthy clip, so I'll cut it there. So that's all that I had to share for you guys today. Many blessings. Remember, we talked about XRP, we talked about Flare, we talked about FXRP, we talked about Canton, and we talked about the Metallicus coins. None of this is financial advice. We're not telling you guys to go out there and buy any of the digital assets that we discussed in today's video breakdown. And we're definitely not telling you guys to go out there and participate in DeFi with your hard-earned digital assets. What we are asking that you guys do is that you take initiative and educate yourselves. Education is the foundation to confidence, to manage risk properly, to execute properly then in this space. And that all starts with your educational foundation. So if you guys want that proper education, CyberX is always here for you, whether you're a day trader learning to gain a proper and consistent edge in these markets, or whether you're here for DeFi. CyberX has the best of both worlds in both of those niche categories. Head over to cyberxtrading.com. We'd love to have you on the team. Outside of that, though, Aqua, that's all that I have for today's Friday call. Blessings to everybody on the call. We do appreciate the love and the support. If you have anything, Aqua, floor is yours, bro.
No, I don't have anything else. I mean, I think we crushed it again. Another great call. But yeah, much love to everybody.
I hope to see you guys on the inside. With that being said, enjoy your weekend. Be safe, be cognizant, be aware, and we'll see you guys in the next Friday's podcast. Everybody take it easy.
Much love. Peace.